All right, this is a pretty highly anticipated one as Clorox reported earnings this morning. Clorox, you may know, is one of the highest cleaning supply companies. You know them from their bleach mostly, but they make a lot of cleaning supplies. So the question is, what have they done? They really rock, especially in this time. So let's look at these earnings and see how much they beat. I expected a pretty nice quarter. What did they do for us? Well, you see Clorox Gap 3. EPS for Q3 is going to be $1.89, beat by 22 cents, and revenue of $1.78 billion. That's right, positive, nearly 15% year-over-year growth. That is pretty massive for this company, especially when you think about a consumer staple that is relatively stagnant. I mean, it's hard to really find growth in these type of companies like a Kraft Heinz or a Clorox. It's hard to find growth because the people who buy it are the ones who buy it. It's really hard to find extra people to buy, except for in this situation. But on revenue, they beat by $90 million. And naturally, the shares were up when the market is down around 4% today. So, Clorox, as you see, good stuff. Gross margin, or organic sales rose 17%. Diluted EPS up 31%. Gross margin rate improved 330 basis points to 46.7%, driven by double-digit volume growth and strong cost-saving performance. In terms of revenue, their cleaning services, your bleaches, stuff like that, up 32%. Household, stuff like wipes, stuff like that, up 2%. Lifestyle, up 10%. International, up 11%. Big stuff. They actually gave guidance for the full year, which is rare right now, and I think that's really why the stock's up. They're expecting plus 4 to 6% sales growth. Implies a $6.44 billion to $6.77 billion number versus a consensus of $6.39. So positive actual growth there compared to consensus is massive, especially in a time like this when everyone else is showing, a decline. Organic sales 6 to 8%. Gross margin rate up strongly is what they're saying. So, advertising, sales, promotion run 10% of sales. S&A expenses 15%. Diluted EPS of $6.70 to $6.90 versus a consensus of $6.57. Very good there. Tax rate between 21 and 22%. Pretty cool. So let's look at some of these specifics here. That's what we like to see. So definitely. Really, they just kind of drive through in this. You see really they're just feeling very optimistic about what's going on. So from cleaning, which is the laundry, home care, and professional products segment, you saw a 32% sales increase and a 71% pre-tax earnings increase. Very cool. Segment were up strong behind double-digit shipment increases in all business units. Home care was the primary driver. Very cool. So again, more people using it. From a household, we're talking about bags, wraps, grilling, cat litter, digestive health. Again, this company is very diversified. You may think of them only as their bleach segment, but they've got a lot going on. 2% sales increase in household, 15% pre-tax earnings increase. Driven by cat litter and grilling. Grilling's massive right now. Obviously, more people are spending time at home. They're grilling more, even though there's not much meat to be had. Lifestyle, we're talking about food, water filtration, natural personal care, dietary supplements. We've got a 10% sales increase, 29% pre-tax earnings increase, really driven behind water filtration as the main thing. Obviously, people are very big about that. And then international, you saw an 11% sales increase, 50% pre-tax increase. Very cool. And we saw the guidance there, obviously. So, very exciting stuff. That's as far as all you really need to share for what this company's looking at. The next thing I would probably look at is the financial statements. And again, this is a consolidated look at the Clorox company. They're massive. My opinion right now, before we look at this, is obviously people are going to question if the trend is going to continue. And in my 100% honest opinion, I believe that the trend will continue further on beyond all of this pandemic. I think this is going to be kind of a an awakener to some people. Not all, and I think it's going to be a smaller subset of the population than we think, but some people are going to be very strict about these cleaning policies after we continue with this. People are going to be very strict about washing hands. People are going to be very strict about using disinfectants, and I think that's going to very much benefit Clorox in the long run. I don't think it's going to go back to normal consumption rates. I think the rates will go up beyond this, so they're going to need to ramp up production. And if they can cut costs while they're doing it, this company's got a very good future ahead of it because of this. I had to say companies actually finding benefit because of a disaster situation, but they frankly are. This company's well suited for it, and if they do everything right, well, shoot, just imagine if they had product able to go everywhere right now and the distribution centers were perfect for them. This company would be even better than they are right now. But in the future, though, I do see long-term benefit because I think people, at least for years on, are going to be thinking about cleaning a lot more than they did before. Germs are going to be a massive thing. So let's look at their balance sheet and see what we got. So from a cash and cash equivalents perspective, very low on cash and cash equivalents, $496 million for this company, but that is versus $11 million if you're looking 9 months ago. Very crazy, but we like to look a year ago. They had $178 million a year ago. So their total current assets, $1.75 billion versus $1.39 billion a year ago. Pretty good in that aspect. Total assets in general, $5.8 billion versus $5.162 billion. So total assets line, they've increased on that as well. Good to see that. Total current liabilities on this company of $1.79 billion versus $1.26 before. So now their current their current liabilities do outweigh their assets, but really it's pretty well a wash. It's pretty close. And from total liabilities, you see $5.155 billion versus $4.381 billion a year ago. So they rose both their liability numbers quite a decent bit. Most of it you see here from other liabilities as part of it, and long term, or really the current assets is what kind of hurt it pretty bad, and that's really from notes and loan payments. So they're paying off some of their notes that they had previously, so it makes sense. But right now, if you're talking about equity, so assets minus liabilities, $695 million. So it doesn't outweigh it that much. This balance sheet isn't beautiful, but it's a good-looking balance sheet regardless. There's not much in terms of liquidity for this company, which I think some people could think is negative. But this is a company that's not really going to get impacted by this as much as every other company. So their balance sheet doesn't need to be as strong to make it through. They're a company that's actually benefiting from this. So overall, I think it's fine if their balance sheet isn't the best balance sheet in the nation. So very excited. This company is doing very good things. If we're looking at valuation on this company, right now trading at a P of 30 is pretty crazy for a company that's a consumer staple stock. You don't usually see that. You see these companies trading with the market right around the 20 to 25% range, maybe a little bit lower. Typically like 15 to 25% I think would be fair. So why is it trading so high? Again, investors are already pricing in a lot of this excitement. If we look year to date on this stock, I mean, are you kidding me? The stock's up nearly freaking 29%. That doesn't shock me at all. And again, a lot of this excitement happened in March when we're talking about people buying more and more product. So this is priced into this stock. I know this whole year's positive earnings, I think it's priced into the stock. Now, the benefit you see from here is the long-term benefit. But does that mean this valuation makes sense? I don't think it necessarily does. I think the valuation is a little bit steep on this, so I'm not considering buying on this. Now, if you had bought at the start of the year around 150, you're a gosh darn genius. If you bought the dip at the end of 2019, right here, you're a gosh darn genius. If in 2018 you bought the dip, you're a gosh darn genius. We're talking about since 2018, you would have been up a solid 67% when the market is right now pretty well flat or down. So exciting stuff. Good stuff for Clorox Company. I'm not buying it. I don't think it's necessarily worth buying right now. I don't believe the valuation's fair.